This video is created by Daniel Kuhlman and Brandon Keys and expresses the author's own opinions. The information presented in this video is for informational purposes only and in no way should be construed as financial advice or a recommendation to buy or sell any stock, asset, or cryptocurrency. Both Brandon and Daniel are not financial advisors, and we both encourage you, all the viewers, to do further research and do your own due diligence before making any investments. So, why should you invest? Well, the biggest reason is inflation. Um, you know, Inflation basically means that the value of your dollar or, your money, whatever it is, dollar, euro, or what have you, is losing purchasing power, and that happens very frequently. The Federal Reserve of the United States, their target inflation is 2% every year. So, the Fed's goal is to devalue that money that you have every year by a minimum of 2%. So that means if you have $100 today, the Fed's goal is that that $100 will go as far as $98 did today next year, if that makes sense. And now, how is inflation measured? The inflation is measured by consumer price index, or at least that's how the government reports it, and that's also called CPI. And it's the average change over time in prices paid by urban consumers for a market basket of consumer goods and services, and it's used to measure inflation. So, after knowing this information, why should you invest? Well, there's very heavy inflation going on right now. This CPI data is from June of 2021, and the CPI continues to tick upward, and it's this highest month over month, meaning it's the largest increase from one month to the next since June of 2008, and that occurred in June of 2021. And then compared to last year, the consumer price index has jumped by 13.7 points, representing a 5.3% increase. So earlier I mentioned that the Fed's target rate is 2%. Well, halfway through the year, the inflation has already risen to 5.3%. So now your dollars that you had $100 at the beginning of the year now is only worth $94.70. So it's dropping down rapidly, and inflation is skyrocketing this year. So you might be saying, okay, well, this is all numbers. What else is rising in price? Well, used vehicles are largely rising in price at historic rates. It's actually one of the first times in history that used vehicles are increasing in price while sitting on lots. And they're at record highs, and there's a large lack of new vehicle productions. And then, used vehicle CPI is now up 10.5% month over month and 45.2% year over year. So showing a huge drastic increase. And then, so this is showing the year over year change. So you can see here that this 45.2 all the way up here, such a large spike compared to, historical past. Even in 2008, when it was very bad depression and economic crash, there's nothing compared to what is going on right now. And then the CPI for average energy cost, so your electricity, gas, what have you, those bills are also increasing too, with showing a year-over-year change of 24.2%, which is a very large change, not quite as large as some in the past, but definitely the largest movement in the past decade. And then transportation is also increasing drastically. So there's a month over month of 3.6% rise increase, which is the highest since June of 2009. And that's also showing a 21.2% change for year over year. So very, very large inflation in all aspects. In all aspects, including, housing prices are skyrocketing, transportation, used car sales, and food and beverages are even spiking up. So everything around us is now getting more expensive. So companies, like the ones named here, Coca-Cola, Pepsi, Chipotle, Tyson's Foods, and Kimberly-Clark, have all come out and said, due to inflation, that they're going to raise prices. Chipotle has already raised their prices by 4%, and Tyson Foods a 7.5% raise. Gas prices are up large. Lumber prices are up large. Coffee is up. Corn, sugar, a lot of different, things that you use and spend your money on day to day are now increasing drastically, making the cost of living go up exponentially. Now, why should you invest? As I pointed out before, throughout this presentation, that everything around us is increasing in price, but your dollar is decreasing. So if you keep your dollars in a savings account, which the average savings account rate is now is 0.05%, which basically shows that, if you keep your money in there, it'll increase by 0.05% while the government and the dollar is being devalued by 5.3% halfway through the year. And, you might say, well, inflation can be combated by wage increases. Well, so far, wage increases are only showing a 3.6 to a 3.7 increase, which is less than the CPI of 5.3. And the CPI isn't necessarily accurate. The Fed leaves out different metrics in the CPI that they feel might have skewed the numbers. So they might have left out the used vehicle prices in this instance or something else, to keep that number a little bit down. So they understand that, it is a very high number as far as CPI is reported, but it's also probably lower than actual inflation. As I was showing you earlier, all these other prices were well higher than the 5.3%. And on the other hand, the S&P 500, the general index of the stock market, is up 18%. So, based on inflation, that's up about 13% higher than, than inflation. So, in the end, that money that you've invested so far has gone up quite a bit relative to, relative to the value of the dollar. So, in order to grow your wealth, saving doesn't just do it anymore. You need to invest your money. You need to be smart with it and spend less than you make and invest the difference. Get yourself up, a little safety net or whatnot, whatever you feel comfortable in. And then, in order to keep moving forward and keep growing your wealth, you'll need to save or you'll need to invest because savers in this day and age lose and investors are the ones that are going to be winning. Thanks for watching, and I hope you enjoyed the content. If you liked it, please like and subscribe to this page and channel, and let me know what you think down in the comments. And so we can improve and keep going forward on this educational series on how to get started in investing and why you should do it. Thanks, and have a